So there are two case studies. One is Ramesh, who is earning 14 lakh salary, and Mahesh, who is earning 30 lakh salary. Both are salaried individuals. Okay, it's not a businessman or a self-employed. Okay, and we'll see what is the best tax regime for both of them and how it will impact their tax outgo. Okay, here in first case, as I told you, Ramesh is earning 14 lakhs net salary. Okay, as per the previous tax slab, old tax standard deduction was 50,000 rupees. So once I take out that 50,000 rupees, my taxable salary will become 13.5 lakhs. In case if I'm opting a old regime, I can use all these savings, ATC, ATD, NPS, HRA or home loan interest, parents insurance, all those things we can use only in case if I'm opting for a old regime. So let's say he's claiming the maximum amount in most of the sections. ATC, as you know, in ATC, insurance is there, PPF is there, EPF is there, ELSS schemes are there. All this comes under ATC, including kids tuition fees. That is, let's say 1,50,000 is completely claiming. After taking out this 1,50,000, my net taxable salary will become 12 lakh. Let us assume he is also taken a personal medical insurance where he is paying 25,000 rupees every year. And he is also investing in NPS, that is ATCCD self-contribution 1B, that is 50,000 rupees per year. After taking out all these things, hope you're able to see here, 11.25 lakhs is the taxable salary for him. Okay, now he can claim either HRA or home loan interest. Okay, let us say his HRA is 2 lakhs per year, or if he has taken a home loan, maximum 2 lakhs under 24 section, he can claim, that is 2 lakhs. After taking out all these deductions, his net taxable salary becomes 9.25. Here I have not taken the case of parent medical insurance. In case of parent, is taken another 50,000 rupees also he can claim if the senior parents are senior citizens. But I'm not taking this. Without that, the total net taxable salary becomes 9.25 lakhs. Now we'll calculate the taxes, how much tax he has to pay for this 9.25 lakhs, correct? So from 2.5 to 5 lakhs, this is old regime, 5%. So 5% of 2.5 lakhs is 12,500. Okay. And the next is, actually it is 5 lakh to 10 lakh. But since his net taxable salary has become 9.25 lakhs. So 5 lakh to 9.25 lakhs, 20%, that is 85,000 rupees is he has to pay. Total put together, it will be 97,000 rupees 500. Okay. That is the tax he has to pay, Ramesh has to pay. I hope this is clear. The calculation is clear. If it is clear, say clear in the chat box. Yeah. Thank you. Thank you. Thank you. So now we'll see the same case for a new tax regime. What will be the taxes for if he is opting for a new regime? Same Ramesh, his salary is 14 lakhs. And since he's opted for a new regime, instead of 50,000 rupees, the standard deduction goes to 75,000 rupees. But if he chooses new regime, he cannot claim ATC, he cannot claim ATD, he cannot claim home loan interest, HRA, those things will not come into the picture. It's only one section which comes as ATCCD 1A, employer contribution. Let us say Ramesh has opted a maximum NPS, that is 10%, and 1 lakh is paying. So the net taxable salary out of 14 lakhs, 75,000 deducting the standard deductions, 13.25 lakhs is the taxable salary. In this 13 lakhs, again I have to take out 1 lakh. So his net taxable salary becomes 12,25,000 rupees. Clear? Now we'll calculate the taxes for this 12,25,000 rupees. How the taxes is calculated? First is with the new rule, 3 lakh to 7 lakh, it is 5%. So that becomes 20,000 rupees. 7 lakh to 10 lakh, 10%. So that is 3 lakh ka 10% is 3 lakh. From 10 lakh to 12 lakh, that is 2 lakh. 15% of the 2 lakh again becomes 30,000 rupees. Then the last one is 12 lakh to 12.5 lakhs because, 12 lakh to 12.25 lakhs, that is 25%, 20%. So the total tax is has to pay around 90,000 rupees, all put together. Okay. Clear with this? Any doubt? Hope the difference between new regime and old regime is clear. Now we'll see the same case for Mahesh also. Okay. Now Mahesh is earning 30 lakh salary. Okay. We'll calculate both old regime as well as new regime. Okay. So since Mahesh opted for old regime here, 50,000 is the standard deduction. 29.5 lakhs is the net taxable salary. And he is also claiming all these deductions. Same 4.25 lakhs. So his net taxable salary become 25.25. 25 lakh, 25,000 is the net taxable pay. Now I have to calculate the taxes for this amount. So how it is calculated here? Here this calculation is done. 2.5 to 5 lakhs, 5%, 12,500. 5 lakh to 10 lakh, 20%. So that becomes 1 lakh. And 10 lakh to 25.25. Anything above 10 lakhs is 30% in old regime. So that is 4 lakh 57,500. So all put together, it will be 5 lakh 70,000 rupees is the total tax payable by Mahesh if he chooses the old regime. Similarly, we'll do it for new regime for Mahesh. Okay. So now Mahesh, same salary is 30 lakh. Now his standard deduction becomes 75,000 rupees. And the only section he can claim under new regime is 80CCD 1A. And let's say he's claiming the maximum of 1 lakh. So his net taxable salary become 28.25. 28 lakh 25,000 rupees is the net taxable salary. As per the new regime calculation, 3 lakh to 7 lakh, 5% again 20,000 rupees. 7 lakh to 10 car 30,000. 10 to 12 lakhs, 15%, that is again 30,000. And 12 to 15 lakhs, 20%, that is 25,000 rupees. And the last one is anything above 15 lakhs is 30%. So till 28.25, it comes around 3 lakh 97,500. If I can add all these taxes, it will be 5 lakh 2,500. So I'm not including that education cess and all those things. It's just for your I made it simple just for your understanding. So in case if Mahesh chooses a new regime, in case of old regime, he was paying 5 lakh 70. But in case of a new regime, the taxes what he has to pay is 5 lakh 2,500. So the net difference is 60,000, 67,500 is a less tax he is going to pay in case if he chooses a new regime. But in case of Ramesh, it was the difference was very less because old regime it was 97,500. With new regime it was 90,000. The difference was only 7,500 because his salary slab is less. So, but for Mahesh, the salary slab is more, 30 lakhs. So his savings will be more. Clear with the first concept, the taxes. Any questions in this? Any doubts? You can either unmute or you can put it in the chat box.
Yeah, hi Vikram.
Yes.
Good evening. This is Arun. Yeah.
Arun, yes, sir.
So the max limit is not 1 lakh, right? 80CCD 1A in PS.
Yeah, it is 1 lakh.
It is not on. It is 1 lakh maximum limit.
Maximum limit 80CCD 1A is 1 lakh.
I think 7 lakh, right?
No. 7 lakh is the total salary. If somebody is having it of 7 lakh of total salary, if he chooses a new regime, it will be zero tax.
No. 80CCD 1A is he can earlier it used to be 10% of the basic he can contribute up to 7 lakh. Now they made it 14% of the basic they can contribute up to 7 lakh.
No, that I'll just clarify. But as per my knowledge, it is 1 lakh. Okay.
No, 80CCD 1B is 50,000 rupees. 80CCD 1A is 10% of the basic was earlier. Now they made it 14% of the basic, and max cap is 7 lakh.
Okay, we'll see that. Okay, I'll just update on that part. Any questions with respect to calculations? Are you good with that calculation?
And also we can claim NP 80CCD 1A in old also, right? Old regime also.
Old regime also, yeah. If it is you're clear with the calculations, then we can proceed with the next topic, that is capital gains. If it is very, clear, the calculations are clear, then you can say yes, so that we can go ahead with the next topic. Yeah. Thank you. The points here is, if somebody is having a higher salary, it is better to go for a new resume than an old resume, so that their tax will be reduced. In fact, government is also favoring the new resume. Okay, so they are slowly taking out the old resume tax over the period of time. Now they are giving more benefit for the people who are choosing new resume. In fact, more than 65% of the income tax were filed using new regime this year. Okay, now we'll see what are the changes in terms of capital gain taxes. Okay, before we get into the capital gain taxes, we have to understand between the equity oriented funds and non-equity oriented investments. For example, equity oriented, when I say, it is either direct equity investments, investing in shares, all those things. Equity mutual funds, hybrid mutual funds with equity exposures of more than 65%. They all come under equity funds. Okay. And non-equity oriented funds are like debt mutual funds, your liquid funds, money market funds, or low duration funds. They all come into debt mutual funds. Even your gold savings mutual fund will also come under non-equity funds. And some hybrid funds, where the equity investment is less than 65%, they also come under non-equity oriented funds, such as conservative hybrid or debt oriented multi-asset funds, all come under non-equity funds. Now we'll see what is the difference between equity. For equity investments, the capital gains is the short term, long term will be applicable. For a debt oriented mutual funds, from now onwards, whatever the gain we are going to get, this will be directly clubbed with the marginal tax rate. So let us understand the capital gains for an equity investments. Okay, because many of us invest in equity and equity mutual funds. So let us see how this is working. Earlier, short-term capital gain was 15%. Now they made it 20%. And similarly, earlier the long-term capital gain was 10%, and now it is 12.5%. But only the favor what the government is giving is the tax-free limit per financial year. It was 1 lakh earlier. Now they are giving 1,25,000 rupees. This is the difference in the old tax slab and new tax slab. Okay. We will see one example to understand better about this. Okay, let us see one Mr. Viral. Okay, he has invested 30 lakh as on 1st August 2024, recent investment, and in a equity oriented funds. Okay, let us understand how the capital gains works in this case. In first case, the value of fund as on 1st of March 2025, that is from August 2024 to March 2025, less than 1 year, the gain is 32 lakhs. This is first case. In second case, the same fund as on 2nd August of 2025, that is after 1 year, let's say we're assuming the gain is 33 lakhs. Okay, total amount is 33 lakhs. And we'll see how, if we opt for immediate SWP and HWP after 1 year, how the taxes will play, that also we'll see. In first case, Viral thinks that he want to redeem the fund because of some emergency. He want to redeem the fund on 2nd of March. The value on that day, I told you, it is 32 lakhs. So his net gain is 2 lakhs, right? He has got a 2 lakhs of gain. Since short term is 20%, he has to pay 20% on this 2 lakh gain. That becomes 40,000 rupees. Clear? Same case, if Viral is redeeming on 3rd of August 2025, that is after 1 year. Okay. And his total gain was 3 lakhs. 30 lakhs has become 33 lakhs. Now, since it is a long-term gain, there is a tax-free amount is there. So 1,25,000 rupees is a tax-free amount. So out of 3 lakhs, I have to take out this 1,25,000 rupees. So his taxable gain become 1,75,000 rupees. So 1,75,000 of 12.5% of 1,75,000 is 21,875. He has to pay 21,875 long-term capital gain tax. Clear with this concept? Or any questions?
Vikram, Ajay here. In short term, there is no exemption of that 1 lakh
No, for
for
short
a
term,
year.
there is no exemption, Ajay.
Oh, okay.
Short term, it is 20%.
Okay.
Yeah. Any other questions from any of the participants? Okay, we'll see how this same thing works in case of if somebody is using a systematic withdrawal plan, that is SWP. So same case, Viral has invested 30 lakh as on 1st of August 2024, and he wanted to withdraw 10% annually. That is 3 lakh every year. 10%, 30 lakhs ka 10% is 3 lakh. Every year you want to withdraw. Usually monthly SWP is given to him. That is 25,000 rupees every month. And we are assuming the assumption what we are making 50% capital and 50% interest. It will not be equally 50% always, but just for the sake of understanding, I am assuming 50% is the capital and 50% is the interest. What happens? Out of 3 lakh total withdrawals, 1,50,000 becomes short term, correct? 1,50,000 will be the short term. So 20% ka short term, that tax he has to pay is 30,000 rupees. In case if he's opting for a immediate SWP from next month itself. So this becomes a short term gain. Similarly, if Viral opts to use the SWP method after 1 year, suppose instead of immediate SWP, he want to withdraw after 1 year, that is from 2025 August. Same 10%. So net withdrawal will be 3 lakh only. Assuming again 50% in capital and 50% interest. So his net gain becomes, long-term gain becomes 1,50,000 because now there is no short-term gain because 1 year is crossed. 1,50,000 is the long-term gain. And again in this 1,50,000, 1,25,000 will be is tax-free gains because government gives you, instead of earlier it was 1 lakh, now they are giving 1,25,000. So the net taxable gain becomes 25,000 rupees. The remaining amount, 25,000 becomes short-term gain. So he has to pay 12.5% on this long-term 25,000 rupees gain. That is 3,125. So this is the main difference if somebody is using a SWP method to withdraw the money. So it is always better now onwards to withdraw it after 1 year so that the taxes what they are going to pay will be less compared to a short-term gain. Clear with these two examples? If it is clear, say yes in the chat box, then we can proceed with the last topic. If anybody has any questions, you can unmute and ask, or you can put it in the chat box. Yeah, thank you, thank you, thank you. So first we discussed about tax slabs, new regime and old regime. Now we discussed about the capital gains, short term and long term, and how it's going to affect our investment portfolio. And these are some of the ready reckoner gain, tax slabs. This I'm going to share with you all who is attending, because it has got an elaborated, detailed table. Because there are a lot of conditions will apply. So especially for a non-equity oriented mutual funds, if the investment was done before 1st of April 2023, so there is a still indexation benefit they can get if they withdraw after 3 years. If their investment was done after 31st March 2023, then they have to pay tax as per their tax slabs. So these are some of the difference. Similarly, there's a ETF tax slabs are there, almost works like a debt fund only. So this detailed, because it will be very confusing if I start explaining, and I'll share this with you all. Okay. Now the most just a summary. See, hybrid funds like debt-oriented funds are hybrid funds, and specified mutual funds with equity exposure of less than 35%, and gold mutual funds, all debt funds like liquid, short duration, and corporate bonds. For all of them, if the investment was made before 1st of April, then the indexation benefit will be applicable. If they if they hold this investment for more than 3 years, then the indexation benefit will be still applicable. In case if the investment was done later, then irrespective of the holding rate, the tax will be as per their income tax slab, that is marginal tax. If they are in the 10%, they have to pay 10%. If they are in 20%, they have to pay 20% tax on that total gains. This is for the debt-oriented funds. Okay. And if the investment was done anything above 1st of April, then there's no indexation benefit. It will be taxed as per their income slab. Hope this is clear how this is going to affect that their taxes, capital gain tax. Now the most important one on the real estate investments. Of course, many of you might have invested in real estate, apartment, flats, land, and now government has taken out that indexation benefit. They made it flat 12.5% tax. How this is going to affect my taxes? Let us see. So here also I am taking an example of Ramesh, who has purchased a property on 1st of April 2023. Okay, and the purchase price was 20 lakhs. He purchased one plot or land for 20 lakh, and today, as on 20th July, before budget, the value is, let's say, 1 crore. Okay, 1 crore is the value. Now, how this taxes will play, we'll see. Oh, sorry. Okay, so Ramesh case, hope you're all able to see the table, correct? So Ramesh, he has purchased a property on 1st of April 2023. Okay, and at the value of 20 lakh. Okay, and today, let me use this. Okay, today, as on 20th July, the value is 1 crore. Okay, the net gain is 1 crore minus 20 lakhs is 80 lakhs. Okay, if taxes has to be paid without indexation at 20% means it will be 16 lakhs, and this will not work like this. For indexation benefit, we use something called as CII. What is that CII means? It's a cost of inflation index. Government releases this cost of inflation index number every year based on the inflation in that year. So that CII number, it's available on the websites. If you search Google, and it will show the CII number from 2000 to till date. Okay, the last year number was 363, and the CII number in 2003 was 109. When it started in 2000, it was 100. So 100 has become in 2002 maybe 105 or 104, and in 2003 it has become 109. So now we have to calculate the indexed value of acquisition, that is indexed cost of acquisition of this purchase price. That comes around 66,60,000 rupees, 550 instead of 20 lakh. So this is the cost of acquisition. Now the difference between the capital gain is, I have to take out, now today's value is 1 crore. Suppose Ramesh sells this property before budget, that is before 23rd July, then indexation benefit will come into the picture. So he has to pay 20% on this gain. The gain is 33,39,450. So 20% of this value, it becomes 6,67,890. This is the net tax payable by Ramesh if he sells that property before budget. Suppose if the property was acquired before 2003, before 2001, then irrespective of the pre-budget or post-budget, indexation benefit will be there. Still it will be there. Even if he sells the property today, the indexation benefit will be there. But if the property was acquired after 2001 April, then the indexation benefit will not come into the picture if he sells now. Clear? This example is clear for all of you?
That formula, what is the formula? Indexation cost of acquisition, how it is calculated? 66,000.
Yeah,
66
the formula is, what they do is, today's inflation number, they will multiply with the price which is bought, okay, divided by the inflation number on the purchase date. That comes to 66,60,000 rupees.
Okay.
Any other question from any other participants? So we'll see the same example in case if Ramesh wants to sell it after 2003 budget, okay, 2004 recent budget, okay. Same case, he has bought a property worth 20 lakh, 1st April 2003, he has invested 20 lakhs. And today, as on 25th July, let's say the value is around 1 CR. Okay, now this is very simple, no indexation, nothing. Total 80 lakhs is the benefit. 12.5% on this 80 lakh, it becomes 10 lakhs. So the extra tax what he has to pay is, compared to indexation benefit, is 3,32,110 rupees if he sells the property after budget. You know the difference now. One case, if he sells the property before budget, one if he's sold the property after budget. So this is the difference what Ramesh has to incur. We'll take one more example to understand much better. That is recent purchase. Recent means just 6 years back. Okay, Mahesh, he bought the same property worth 50 lakh in April 2018, just 6 years back. Okay, and he sold that property before budget, that is 20th July. So what will happen? 1st April 2018, the CI number is 272, and today's CI number as on 20th July, this financial year is 363. Okay, so his purchase price was 50 lakhs and his selling price was 1 CR. So the net gain is 50 lakhs. So tax will not work on the net gain. We have to find out the indexed cost of acquisition. So indexation cost of acquisition is 66,72,794. So if I do the difference of selling price and indexed cost of acquisition, this is the value, 33,27,000 is the gain after discounting my indexation benefit. So I have to pay tax on this money. So that is 20% on this amount, that becomes 6,65,441. Okay, this is the tax Mahesh has to pay if he sells the property before budget. Same case, we'll see if Mahesh chooses to pay, sell post budget. So he's not aware of the budget and he's planning to sell the property. We'll recalculate the taxes. So 1st of April, same 2018, he bought the property for 50 lakhs. And today the price is 1 CR and the total gain is 50 lakhs. So he has to pay, without indexation, he has to pay 12.5% tax. So 12.5% of this 50 lakhs is 6 lakh 25. If you see here in this case, instead of 6.65 lakh, Mahesh has to pay 6.25. So the savings for him is 40,441. For him, the without indexation benefit has more benefit compared to indexation benefit. But whereas in case of Ramesh, uh, indexation benefit was there, but for Suresh, there's no, for Mahesh, there's no benefit. So here one important point is there. What is that important point is how this is going to play. So you understood both examples, Ramesh and Mahesh. So first important point is, if the real estate growth is lower than the inflation rate, then the indexation benefit will be good. Because in case of a Ramesh, the real estate growth was slow. From 2003 to 2024, there is not much growth. But in case of a Mahesh, the growth was much faster from 2018 to till date, especially last 2 to 3 years, the real estate growth has been phenomenal. That's why 12.5% still makes sense for them actually if they sell it after the budget. But very important point is what happens in case of real estate is many of them they don't what they do, they buy new property after selling a property. Suppose I have a land, I sold it for 1 crore. I'll use this 1 crore for reinvesting into some other property. In that case, no need to worry about the taxes. So the taxes within, if you buy the property within 2 years, the taxes will be nullified. So these are the 3 important points to remember. Clear with this concept? How the removal of indexation benefit is affecting my taxes in case of real estate. Any questions? Any clarifications? If the concept is clear, you can say clear. Or you can type in understood. Yes. Few people are responding. Thank you. Yeah, window period for reinvesting is 2 years. Within 2 years, either you have to buy a new property or you can use that money for constructing a self-occupied property. Okay, now we have seen these examples. Okay, yeah. So apart from like what we discussed is, one is the changes in tax regime. What is the difference of taxes? That is first part we discussed. Second part we discussed about capital gain changes, that is from 10 to 12.5% and short term from 15 to 20%. And third thing we discussed about the removal of indexation benefit, how it's going to play in the different investments, especially in the real estate. Now, few important points for all the investors. One is we have been doing KYC modifications. The objective of KYC modification is to ensure that your name is uniform in all 3 sections. That is in your PAN, in your IT website, as well as in your bank details. So the name has to be uniform. That's why for most of the clients, we are doing KYC modification, and FATCA details also very compulsory from 1st of August. FATCA details is nothing but Foreign Account Transaction Compliance Act. Second thing is nominee details in investments. So please verify in each and every folio whether the nominee is registered or not. Okay. If the nominee is not registered, please get in touch with us. We'll ensure that nominee is registered. If the nominee has to be updated, for example, when I started investment, I given my parents' detail as nominees. Now I'm married. I want to change the nominee details. That we have to do it. Okay. So that has to be changed. Third, most important is updating your mobile number, email ID, and bank details in each and every investments. You might have changed your mobile, you might have changed your email ID, or you might have switched the bank. So that time we have to ensure that the bank details are updated in the folio, because what will happen is when I want to withdraw, if my mobile number is changed, I'll not get the OTP. If my email ID is changed, I'll not get the OTP. Then it becomes challenging for me to withdraw the money. Okay. Many people, they might have changed the bank details, they might have forgotten to update it. So ensure that it's got updated so that whatever I'm withdrawing, that will get credited to my current bank account with current IFSC code. In many cases, especially in case of a Citibank, for example, Citibank, people have started investing through Citibank. Now the Citibank has merged with Axis Bank. So we have to update the IFSC code of Axis Bank into your folio so that when you're withdrawing, there will not be any difficulties. Okay. So these three things, please remember. In case if the name is updated or PAN card is updated, we have to do KYC modification. Okay, now before we close, I'll just launch a quiz. You can all participate in the quiz. Okay. Meanwhile, if anybody has any questions, you can ask. Okay, I have launched a hope that quiz is available. You can answer questions. You can answer this question just to test what we have learned in this 40 minutes.